Markets were in another chop fest today, basically going nowhere with the SPY trading right around the zero gamma exposure line all day long. We closed just above the 580 level, and this has basically been a chop fest, as we've been pointing out here on all of our YouTube videos basically for the last 2 straight weeks. The market seems to be somewhat neutrally positioned according to the gamma exposure structure, looking at the SPY. And that's a big part of why I think the choppiness and just this trading right around this very narrow range. This is just a little over 1%. 1.5% trading range here on the SPY. Very narrow range for such a long time period. Looking at our option flow dashboard, we have this top flows metric here. Basically, we can sort, for example, by premium traded. This is something we've been discussing here in our community Discord for the last several trading sessions. And one of the things I noticed today, especially, is that these premium traded values here for these option contracts are all basically going to zero. And that's exactly what you would expect in a chop fest. Basically, nobody's winning who's going long contracts. All the premium is getting crushed. And you can see that just as we scroll down, almost all of these top flow contracts, which is the highest premium traded, almost all of them going to zero here on the SPY. Taking a look at a slightly bigger picture, the AAII Investor Sentiment Survey, this is again something I mentioned last night. Basically, heading into this week, we started out in a very neutral position as far as investor sentiment goes. And this is right in line with these historical average. Again, just adding more support to why we've been in such a narrow range-bound market the last couple of weeks. However, it's not something we expect to last. Of course, if we look at the S&P 500, the gamma exposure structure is actually tilted and skewed to the bullish side. We've got large gamma exposure concentrations at the 5,900 and the 6,000 strike, which we've been pointing out for the last several weeks. So let's take a look at the volatility index. Sean, I know you've been watching that very closely over the last several weeks.
Yeah, thanks, Anthony. Good points on the S&P 500. Leading into the VIX, I wanted to point out that, I see the S&P stuck so far, at least for the last week or so, stuck below the whole moving average, which I consider to be a bearish signal. And that next support level would be 57.82.90, so basically 57.83. And every time we've hit this whole moving average, it's rejected, and left a wick on the daily candle above it, which is a bearish sign. But to your point, I see signs that we have volatility ahead, but I don't know that it's just going to be in one direction. So definitely not beginner level trading ahead. When I look at the chart for volatility, I see a bullish chart for the VIX itself in general. We basically have a series of higher lows going back from late July timeframe. Not trying to draw a perfect trend line here, but you can see that the VIX has been rising. We also have the Keltners at 2056, the upper Keltner channel on the 2-hour, which I find the 2 and 4-hour channel on the VIX to be, fairly helpful for my trading. I wouldn't be surprised to see, some catalyst this week to cause, one more VIX spike. Maybe we see this thing, go up close to 21. But if you take a look at the gamma picture for the VIX gamma picture has not really changed much. We still have this dealer cluster in the 20 range. Today we had pretty high volume at 14.5. And last week there was a day where we had pretty high volume in the 13 to 13.5 area. I think with the way that gamma is structured, it certainly lends credit to the idea that we get some form of an additional spike, and then potentially even a VIX kind of a mini collapse, at least back to this area that's been support since the early summer around the 15 range.
So let's take a look at a few names that have our attention this week. First, I want to start with Shopify trading right around the 80 strike. That also happens to be just above the zero gamma exposure line. That's obviously an interesting area for support and resistance, especially when you see a trend coming down into this level that often will act as support. And just looking at it on the chart, that's a natural area for support as well. The largest gamma exposure concentration is at the 85 strike, and there's further positioning at 90 and 95. So at some point, I think SHOP is going to be breaking out of this range. SHOP has earnings coming up on November 12th. So, this consolidation could continue in this range here between 80 and the 83 level before breaking either out to the upside or to the downside. But market participants are definitely bullish on SHOP. And I also think Shopify's long-term prospects from a balance sheet perspective is also looking very interesting. They've got something like, 170 million in recurring monthly revenue. So really great business model that they've got, and they're just growing every single quarter. So long term, this is an interesting play. And in the near term, the gamma exposure perspective is also backing up that bullish scenario.
All right, thanks, Anthony. I wanted to highlight Tesla, which is a name that we've covered a number of times and also traded. Tesla currently has positive gamma, but we don't have a lot of large negative gamma clusters while we have this big cluster at 300. And if you come up and look at the GEX levels chart, it also highlights that this is a dealer cluster zone right at that 300 level. Pretty high volume at 300 today. The second highest volume outside of the 270 area. Going over to the chart, you can see that it did breach that upper Keltner channel. It has come back under the upper Keltner, which I would expect. This is supposed to be a good guide point for potential resistance areas. The way that the gamma picture is looking, I don't necessarily expect it to come all the way down to 240. We've got a rising whole moving average, so that's one to keep an eye on. If we do get another day where we start out a little bit lower, it may be worth looking at and seeing what the gamma picture looks like and if it's shifted at all tomorrow.
Thanks for that, Sean. Yeah, definitely one that we are watching closely. Next, I want to talk about Palantir. Palantir coming right into that 45 level today. We've been discussing this for the last couple of weeks since Palantir went all the way below the 41 strike here just about 10 days ago or so. That proved to be an intermediate low, price trending all the way back into the largest gamma exposure concentration at the 45 strike. We've been bringing this up multiple times over the last week. Interestingly enough, though, today we've got pretty large volume here at the 50 strike. This is around 25,000 contracts traded today. Gamma exposure at the 50 strike is also growing. And so we'd like to see either further consolidation between 46 and 44, or maybe a pullback back into like the 43 range before another leg higher. And that would be kind of targeting the November 15th or maybe end of November time frame. So that's going to be something that we're going to be watching, this 50 strike, for both volume and gamma exposure here in the coming week and into next week.
Thanks, Anthony. Strong uptrend on that plant here. I'm glad you highlighted that one. I wanted to take a look at a defensive name, which is Coca-Cola in this case. And, the stock itself, I've got the chart pulled up, kind of looks like maybe there's a crash happening after too much caffeine. But I'll tell you, I had a couple of Diet Cokes over the weekend, and the artificial sweeteners aside, I had just enough caffeine to energize me to pull this out and look at the chart, look at the gamma picture, and I see an oversold stock. We've got this 70 strike with a large gamma concentration. We're kind of right at that zero gamma level. Pretty high volume today at 70 as well, which is interesting. And actually, look at what's happened since October 25. We actually had a pretty substantial increase in gamma to the positive side. So, I like Coca-Cola here. And it maybe not my favorite soft drink, but it's been a staple for a lot of years, and it looks like it might be an opportunity here.
Don't forget, if you're interested in accessing our gamma exposure dashboard and option flow analytics, head on over to geeksoffinance.com. You can sign up and become a member. I'll put a link in the description below. Also, be sure to check out our community Discord. It's absolutely free to check out. We've got a ton of great traders in there sharing ideas and market analysis every single day. You definitely want to join the conversation. Link in the description below. Thanks so much, everybody, for watching, and we'll see you guys in the next video.